Hey there, I'm Roxane Webster.
And I'm Keith Alba, and we are the owners and partners at my home team at Keller Williams Advantage.
And what is this?
This is the Honest Hour. That's right, this is our opportunity to bring you kind of a no spin, no frills, just our thought, the one spin I guess is the only one that's allowed, but just our thoughts on the Denver real estate market and metro area, what's happening, what are the things adjacent to it, just everything kind of real estate.
Yeah. So, the big news, it isn't all that big news, but the big change we're seeing for the first time in years, we're seeing the inventory increasing.
That's right. Yeah, it's definitely on the climb. We're just seeing more and more active inventory coming, which normally isn't that much of a difference this time of year, right?
That's right.
This is our spring selling season. We do see more activity. We see listings increase. What we're seeing decrease is the number of buyers that are out there. They're taking some of that old inventory or the seasoned inventory off of the market.
Well, and I think that those are not two unrelated numbers, right? We've got buyers that for various reasons, we're hearing from a lot of buyers, they're just cautious right now. They're not sure about the economy, they're not sure what the fallout from tariffs is going to be. People are being more careful, slow, and deliberate in their financial decisions, especially big ones like a house. So if you've got buyers moving more slowly, you're going to have the inventory climbing because it's not working its way through the digestive tract of the market. If less things are being sold, a normal, regular pace of houses coming to the market means that your inventory is getting larger and larger.
Yeah, that's it.
Yeah.
I mean, we're not seeing abnormal stuff, right?
That's right.
It's not distressed inventory. We're not seeing a ton of short sales. Foreclosures are ticking up a little bit, but the stats I saw was like 3%, so it's pretty minimal that's on there. VA has started to process some of their delinquencies, but overall it's not a saturation of the market of distressed properties.
We're still sitting at under 3 months of inventory.
Yeah, it's just on the climb that's there. Unless, and then we break down into the market segments, right? Your first-time home buyers in the Denver metro area. So I would qualify somewhere $500,000 and under. Those are moving. Those those buyers are out. They're looking. They're, you know what? I don't have a 3% interest rate to compare to this 6 7/8 or whatever. We're in the high sixes roughly about this time when we're at time of recording here. So they're not as gun shy of the percentage that they're paying.
And I think this is really good news for buyers, actually. Even though they're paying more for the money right now, FHA and VA, first-time home buyers, have been really hard-pressed for the past 10 years to be able to compete with cash and with conventional loans, right? We're certainly not, it's ridiculous to go back to the Hunger Games of 21 and 22, where if you even wanted to be, talk to the hand, if you even wanted to talk to the hand, you had to be making an offer that was $100,000 above the list price.
Firstborn child,
the Rumpelstiltskin offer you had to be presenting.
Right. We're definitely not to that. We're past that, thankfully.
Right. And sellers are willing to pay some concessions and some points and things that make it possible for first-time home buyers to get into the market and get properties.
Yeah.
So that's great news as far as I'm concerned.
Yeah, it's great for them. Finally an opportunity for them to get into that wealth building of owning and purchasing real estate. So definitely a positive for them. If you are a first-time home buyer, run now, right? This is the best opportunity, as Roxane said, you have seen as a first-time home buyer in years. That are out
10
there.
years at least.
Interest rates can be refinanced down the line. Those sorts of things. Just get in. Home ownership is the key to all of that.
Yeah.
Sellers, I think it's an expectation adjustment. Really, is kind of where we're at. In Denver metro area, we are not seeing the same kind of price reductions or recession in the pricing like some of the other markets that are out there. Austin, Florida is getting hit pretty hard right now. But those are also the markets that were leading the charge in those Hunger Games in terms of annual appreciations and those sorts of things. So what goes up must come down, and they're experiencing that pretty heavily right now.
I think it's probably safe to say if you take, we all, across the country, we had crazy crazy appreciation during those years, right? But Austin and Florida, it was insane appreciation. You were seeing people buying a house and it had doubled in value a couple of years down the road. We had massive appreciation, but not like that. So I would argue that those communities had edged into bubble territory, and what they're seeing in a decline in values in those communities is likely a correction to get them back to the trend.
Yeah, reversion to the mean, to the average, that sort of a piece. And we're seeing some of that, just not as big, right? You know, we've talked in previous videos about the trend line, you know, a 4% annual appreciation historically. And what the experts are saying now in the Denver metro area is you're probably looking at a 1.5% to 2%. So below that norm, but again, we were above that previously, and so it's back to that reversion of the mean.
It's kind of reversion to the mean, but what we're seeing, and there's some exceptions to this, there are parts of the condo and the townhome markets, depending on where you are, that are seeing some easing in those values a little bit. But for the most part, we've gone from people having expectations of 10 or 12 or 16% appreciation in a year down to 2. That feels like we're losing ground. I actually think it's a little bit corrective. It gives buyers an opportunity to get into this market, and sellers, as long as where I think we're going to see some of these distressed sales, even though it's a small amount, are people who bought in the past 2 or 3 years, right?
With a low down payment amount, or 0 down payment if you're talking a VA or, you know, something along those lines. Absolutely, I think those are potentially at risk, especially when you factor in the cost of sales.
That's exactly it.
Yeah.
You know, when you buy a property, if you buy a property with 3.5% down, right, and the annual appreciation rate is 4%, right, on average, that means that one whole year of appreciation, and it costs somewhere, you know, I usually use the number of 9 or 10% of the value of the property is what it's going to cost you to sell it. That's what Keith means when he says cost of sale, right? So you've got your compensation of the realtor, if you agree to do compensation to the buyer's agent, because that'll attract more buyers, you've got that compensation as well. Plus you've got title insurance and taxes and
transfer
blah, blah, blah.
fees and
right. So it'll cost you, you know, somewhere between 8 and 10% to sell it, right? At 4% annual appreciation, that means 2 years just to break even from what you walked into the deal with, right? And if we're at 2% appreciation, that's 4 years to break even and be able to sell it. So if somebody bought the thing in the past year or two using a very low down payment, and they find themselves with a life event, somebody gets sick, they have a job, they have a relocation, they fall into some financial distress, those people are upside down if they try to sell right now, and that's where we're seeing this slight uptick in distress inventory.
Right, and that, again, that 1.5% to 2% appreciation is for the single family detached sort of stuff. Mm-hmm. Condos, 0 to potentially, depending on the area or the unit itself, could see some negative appreciations, which even exacerbates that issue that you were talking about.
Well, and here's a big, because everybody always wants to compare financial distress that impacts the housing market to the Great Recession. Here is the big, enormous, unsurmountable difference between this market and the last, and it's the nature of the financing products themselves.
Yeah.
Right? Right now, if you bought your house or your condo in the past couple of years, your job hasn't changed, maybe you want another bedroom, there's a baby on the way, you can hunker down, hang in for a couple of years, that house will gain value, you'll be fine. Right? You can sell it once it's gained a little bit of value, have a little bit of dough for the down payment on the next property. Right? Back in the Great Recession, you could have all your same financial situations, same job, same income, same bills, but because the loans were so horrible, they were adjusting, you could go from a $2,400 a month payment to a $7,000 a month payment in 1 year of adjustments. Right?
Right?
So the housing, the financing product itself made it untenable. Right now the interest rates are high, but if you can qualify for 6 and whatever, if you can qualify for a 7% interest rate, you can afford it. You may not like it, but if you can afford that and the lender agrees it, you can buy it at that interest rate right now. That loan itself is not going to increase in cost. The only thing that will increase your cost is if your insurance rates or your taxes go up, and that's always been the case with real estate, right? So it's not like you're gonna be in that house and you can't afford it just because the loan itself is behaving strangely. So there may be some folks who bought in the past couple of years who need to hunker down and wait for it to catch up to the values. Guess what? That is the norm.
Yeah.
What we've seen in the past for several years with this double-digit appreciation year after year, that is not the norm.
Right. Absolutely. Yeah, I think that covers it.
That
on this
covers
one.
it.
If you have questions, you want to dig into this a little bit more personally with us, absolutely reach out. But before you go, make sure you hit that subscribe button because we're always putting out this valuable content.
Valuable content.
And you don't want to miss any new ones, so make sure you hit that bell so you get alerted when new ones do get posted. And for now,
Thank you so much.
have a great day, and we'll see you on the next one.